The mortgage word of today is debt to income ratio. Your debt to income ratio is the most important thing outside of your credit, that determines what program you'll qualify for, how much home you'll qualify, how much of a loan you'll qualify for, and what program benefits and exceptions you may get being on a certain program. So your debt to income ratio is we calculate that using your gross monthly income. So not what you bring home after taxes, pre-tax your gross monthly income. If you have social security or disability, we still take that gross amount that you get before any Medicare or anything is taken out of that. So inside your debt to income ratio, the debts that we count against you are not just the things that are on your credit report. You could have child support or something that doesn't show up on your credit report, but shows on your pay stub or showing coming out of your bank statement. Same thing with alimony. Um, but same thing with alimony, other things that you'd have to be that would be taken out, or if you have a buy here, pay here loan that's on a car or anything like that, or a piece of property, it may be a buy here, pay here for a manufactured home or something for your business that's on your personal property that the underwriter sees come out of your banks, out of your bank statement. So your debt to income ratio is important. So a lot of times people try to calculate it. That's why I'm not even going to give you the formula on here, because you really need to talk to a professional so that we can calculate your debt to income ratio and you can afford what you think you can afford. A lot of times people they go online and say, "Oh, I already figured it out. I can afford about 400,000 or 350," and then we actually look at the file and you can only afford 300,000. And it kind of breaks their heart because they've been looking at homes that are out of their price range. If you start early, there's things that you can do to counteract issues on your debt to income ratio. There may be student loans that can be put into an income-based repayment plan that we're having to count a higher percentage again. There may be cars that can be refinanced or other loans that you could pay off to help you to afford what you're still looking to afford. So if you have any questions, you want to get pre-qualified, let's talk about your debt to income ratio. Reach me at 404-461-3172 or reggieloans.com.